we are live from Bloomberg's world headquarters in New York. I'm Sonali Basak.
And I'm Tim Stenivek. Welcome to Bloomberg Crypto. A look at the people, transactions, and technology shaping the world of decentralized finance.
And Bitcoin's been under pressure. It's been hit by overall market volatility and souring crypto sentiment. At one point, Bitcoin fell below $77,000.
A big part of that crypto volatility coming from President Trump as he continues to take aim at Canada with tariffs. In a moment, we discuss U.S. energy policy with a Canadian Bitcoin miner CEO.
And the crypto industry is still digesting the president's recent White House summit and his move for a Bitcoin reserve.
All that and more coming up over the next half hour right here on Bloomberg Crypto. First, though, a snapshot of the market over the past week, and it has been ugly. Crypto's been dragged down along with other risky assets by concerns that President Trump's trade tariffs against other nations could trigger a downturn in the U.S. Look at this, Bitcoin down 7.3% over the last week, Ether down 12.2%. You got Solana down 16%. You got XRP associated with Ripple, of course, down about 14%. Then you add in the news last week that the government will not use taxpayer money to fund a Bitcoin strategic reserve. That disappointed some in the industry, so you got selling across the sector. Now, as I mentioned, risk assets as a whole under serious pressure in recent days. The S&P 500, in fact, it's back to levels not seen since before the election. We're pretty much trading at September levels now. Despite some recent selling in Bitcoin, though, it's not actually the case. Bitcoin's still up 17% since the election, though it's down about 25% since its January high, Sonali.
I have a chart for you, Tim, that can explain some of what's going on, because to your point here, there are some supply-demand questions. If you don't have the U.S. buying, then where is that marginal buyer for Bitcoin? But by and large, also, who's selling? If you think about the risk appetite out there, this is the correlation of Bitcoin to the NASDAQ 100. The NASDAQ 100 hit correction territory again this week, and you do see that there have been times that Bitcoin was a diversifier. That's not true today. You have seen that correlation start to rise once again. I do want to flip up the board here to shares of Michael Saylor's strategy, because this is one stock in particular. Of course, a lot of people were very excited at post NASDAQ 100 inclusion, but it's fallen to nearly halfway below its November peak. It's certainly fallen quite significantly this year alone, but again, Michael Saylor, big believer, he keeps buying.
Just don't call it MicroStrategy, Sonali. Strategy, as you mentioned. Some of the hardest hit by the volatility are crypto day traders who use ETFs. For more on this, we're joined by Vildana Hajric. She's cross-asset reporter for Bloomberg. The thing about these ETFs, where they have leverage, it's all well and good. Well, the asset that's underlying is going up, but you have a few down days, and there's some serious pain.
Right, we can see really significant double-digit losses in some of these. So these types of ETFs are relatively new. They've only been around for a couple of years. And what the majority of them offer is 2x, for example, of an underlying stock like Coinbase. When Coinbase itself isn't doing well, the 2x version, the ETF version, it just gets hit that much harder. And so we're seeing losses across a number of ETFs in what I'm calling the crypto and Musk complex. So it's ETFs that are 2x Bitcoin, for example, or 2x Ether. Those have been hit hard, but so have 2x Robinhood, 2x Coinbase, as I mentioned, 2x Palantir, 2x Tesla. So all of them are really seeing some major, major losses.
Do we see, is there enough damage to kind of see a permanent, I don't want to say permanent, but to see like meaningful moving away from these products?
It's interesting, actually, because when you look at some of the flows, because we can look at flows, obviously, into ETFs, some of them have seen inflows in recent days. So yesterday we had a really big down day for a lot of them, and some saw, marginal inflows. One interesting one is ARK. I think just because Cathie Wood has been such a big crypto proponent, but also an Elon Musk proponent. And on Monday, she saw a nearly $300 million inflow into ARKK, the flagship ARK fund. And so there's a little bit of dip buying, but I think it's too early to tell because overall, everything has just been doing pretty poorly.
In the commercial break, you're whispering to me MSTX. This is a 2x levered MicroStrategy, or strategy.
There we go.
Was MicroStrategy.
That's my fault.
Still kind of in the name. What are you going to do about it? You know, one thing that interests me about all of this is that you had that era, let's say before the FTX crash, where a lot of leverage was popped out of the system through means of exchanges and brokers and other types of companies. Is an ETF the new way to really find leverage in this system? And is it a safer way than in the past pass, especially if you consider strategy being a levered play on crypto and then the ETFs being leverage on top of leverage.
Right. This is another interesting complex in that MicroStrategy is buying Bitcoin, which pushes up the price of Bitcoin, which helps MicroStrategy go up, which helps the ETFs go up, and the 2x versions. And, it really is this complex that, as we were just saying, gets disproportionately hit when things turn lower. I wouldn't say it's necessarily safer, but ETFs are definitely easier to move in and out of, which is one of the reasons why people prefer ETFs. But still, MSTX and MSTU, they're the 2x MicroStrategy ETFs, and those have been hit really hard so far this year.
We appreciate your reporting so very much. That is Vildana Hajric with Bloomberg. Here now with some industry perspective in volatile markets. John Wu, president of Ava Labs. Ava Labs developed the $8.2 billion Avalanche token, which is the 14th largest cryptocurrency. And of course, John, we love to talk about this. You are a longtime trader yourself, a tiger cub, if you will. When you look at the volatility in the markets right now, we were just talking about leverage. The question remains, has enough leverage been popped out of the system to be comfortable with the floor that we're seeing in Bitcoin today?
Well, I think it's actually ironic that we're worried about the asset prices going down so much when we're on the cusp of massive adoption in the space as regulatory clarity is on the come in this year. Now, in terms of whether it's bottomed out or not, that's a tough question, but if you look at the open interest in the futures on the exchanges, there's a little bit more to go down perhaps. And also the other thing that people don't realize in terms of leverage on the space is that in the on-chain world, one of the biggest growth areas has been what they call liquid staking. And liquid staking is nothing more than rehypothecation, allowing your Ethereum to be collateralized and to be staked and restaked. It's literally no different from what we saw in 2007, 2008. So now with this down market, that there's a lot of liquidation of that because they're unwinding that leverage. So that is happening on-chain in terms of some leverage unwind. But you're right, it's nowhere near what we saw in those centralized wallets with the leverage back during the FTX timeframe.
It's interesting because when you saw the moves out of the White House, perhaps there was no more excitement than what we saw surrounding the potential for a strategic Bitcoin reserve and then the White House Crypto Summit. The idea of you have kind of all the president's deputies here bringing over the community to home base. Nothing happened, at least not in terms of pricing. In fact, you're worse off for it when you look at it today in terms of crypto pricing. So realistically, is there a big move that this administration would have to make to bring the price back up to where we were in the weeks after the election?
I think it's naturally going to happen. I mean, there's now more refining of the Genius Act, which is basically the Stablecoin Act. That will go into place. And then stablecoins are the big unlock in terms of adoption. So you have adoption that's going to happen when regulatory becomes more clear. We are working with so many different companies like the Cleveland Cavaliers, trying to put an entire loyalty fan base engagement system on chain so they can have better understanding of what their fan base is actually doing by using payment rails, using stablecoins possibly. I mean, there's just a lot of adoption that will come and that will reverse a lot of this trend. There's also more access. I mean, today, Van Eck just announced that they register for a Avalanche ETF. That's huge. There's more access. It's a convergence of traditional finance with the crypto asset class. And I think people should be more excited than ever right now. Ironically, the asset prices are doing the opposite.
John, be honest. Are you feeling a little left out that Avalanche was not included in the cryptocurrencies that were mentioned by President Trump? Not the strategic Bitcoin reserve, but this other stockpile, Ether, XRP, Cardano.
Actually, Ether was left out too, I believe.
And Solana. Well, this is the other cryptos that were mentioned, later when he said, "I love Bitcoin and Ether too," for that stockpile. Are you feeling a little left out?
No, we're not. He's very familiar with people who have been very in front of him. We've been very focused at Ava Labs to build great partnerships with Web2 type people to work on the technology. I think he will know us and pretty shortly as soon as more of these partnerships that we're working on come to fruition. We helped Apollo, tokenize a private credit fund. That's another example. We're working with BlackRock on Biddle. So he's going to know us because of the excellence of the technology and the BD.
Are you getting what you want to see from this White House, from the regulatory environment here?
Yes. I think the speed with which they're moving and the people that they're putting in place, David Sachs and spearheading a lot of that, I think he's doing a great job of creating a bipartisan environment because we don't want things to be reversed in 4 years or 8 years. So yes, he is, and he's actually keeping to all his promises. I have to say one thing. I don't think that announcement of the executive order on the Bitcoin reserve is not bad, really. It's not that bad. It's the first step. And they're not going to, and they shouldn't be using tax dollars. I mean, reserve should be used to stabilize a currency, worry about inflation, hedge against inflation, in other words, and supply of critical assets like petroleum in the past. So I think he did the right thing.
You know, to the point that me and Tim were making earlier, this kind of other set of crypto assets, it is confusing. To the point you were making, you have President Trump saying he loves Bitcoin, he loves Ethereum, but Ethereum left out of the language ultimately. And a lot of people in the crypto community pointing that out as well. What's the future of Ethereum here? I mean, this is an asset class where there was a lot of excitement, particularly after you saw the spot ETF movement move away just from Bitcoin to also include Ethereum. But if you have more crypto assets potentially included, then does it take away some of the luster?
Yeah. So first of all, Avalanche is Ethereum compatible, so we're always welcoming the success, and it's still the biggest chain out there in terms of activity on chain. Take Bitcoin aside. So, but the reality of what you're saying is there has been a lot of new supply of new chains that have come across, either L1s or L2s. We've seen that over the last year or two. That's actually contributed to this sell-off. There's just a lot of supply out there. And in fact, the VCs who helped create that supply, their unlocks are actually happening as they vest. So that's not helping the situation in the short term, at least. So there's more competition, and that's actually should be good for this space because people are going to have to up their game on the technology.
All right, John Wu, always good to check in with you. John Wu, president of Ava Labs. Coming up, the U.S. is making significant shifts in policy with regard to crypto and Canada. We're going to be talking with someone who sits in both of these worlds. His company is mining Bitcoin in Canada. We got Bitfarms CEO right after this.
And we'll get you all the details on last week's White House Digital Asset Summit. And President Trump had met with some crypto leaders and urges lawmakers to pass stablecoin legislation.
And to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. Electricity in Canada certainly in the headlines today. President Trump saying he would increase steel and aluminum tariffs on Canada to 50%. Trump says this is in retaliation against Ontario's move to raise taxes on electricity sent to the U.S. One company perhaps best positioned to discuss this current situation is Bitfarms. It's a Canadian-based Bitcoin miner. Its CEO Ben Gagnon joins us now. Ben, good to see you. How are you looking at this back and forth between the U.S. and Canada historically? Its closest neighbor and ally.
Thank you for letting me be here today. I'm really excited. I think the situation is constantly changing, but the reality of it is that both of these countries are energy nations. They're countries whose economic success for the last 100, 200 years with the Industrial Revolution has been driven by access to cost-effective power. And so the opportunities that are present in the United States are also present in Canada. And I think this will all resolve itself and end up in a much more deregulated and smooth and efficient market, because for years it's been tied up in regulatory red tape. I don't think this is anything new. I think it's just being drawn a lot more attention to it.
But certainly the tariffs that have been announced are new.
Certainly, yes.
So how does that affect the Bitcoin mining business in Canada, given the fact that lots of Canadian miners have sites close to the northern border?
Yes, so we have all of our sites are based in Quebec. And I think the two largest areas for mining in Canada are going to be Quebec and Alberta, followed maybe by British Columbia. I don't know if there's a lot of Bitcoin mining happening in Ontario. It's not as robust of an energy market. And over the last several years, they've really taken a big push on cutting back on baseload capacity. And so they have a much less attractive market for Bitcoin miners and for data center companies. So I don't think it's really impacting the industry so much today. But I think it does have implications for what policy and regulatory frameworks are going to look like in the future. And what we want to see as a company is we want to see greater access to electricity markets. We want to see less regulation on setting up new businesses, setting up new power applications, so that we can continue to grow our business.
Right. Expand on that a little bit, because on one hand, you have the president saying he wants to send more electricity to the United States. Electricity, power is certainly something you need as a Bitcoin miner. At the same time, you said you're in the U.S., about to go to Pennsylvania to look at some of the acquisitions that you have made. When you look at the locations across the U.S., when you're thinking about the power needs, it's a local business. Right? I mean, does what happened at the White House really impact the way that this works on a local level for you, given the power needs that are required to expand?
Yeah, to a certain extent, of course it does. You know, as a business, we don't really control our revenue from Bitcoin, right? The Bitcoin price goes up or down, and that's out of our control. What we can control as a business is our costs. And so it's really important as a Bitcoin miner to focus on controlling our cost of energy. And one of the ways that we can do that is we can look for pockets of energy that are underutilized, that are, used to power heavy industry, which has been outsourced, to other countries over the last 20, 30 years. And so
maybe not so much anymore. I mean, that's at least the hope.
Well, that's the pendulum swimming back, right? And that's why the Bitcoin miners are so much in the spotlight right now, because for the last 4 or 5 years, they've been heavily investing in all this energy infrastructure that used to power aluminum smelters and steel refineries and all the stuff which was outsourced. Now, Bitcoin miners have these assets, and as the pendulum swifts back to America, those assets are now in high demand.
You mentioned acquisitions. I'm thinking more broadly about acquisition potential, because, of course, you kind of separated last year from the idea of a Riot takeover bid. You left open the possibility late last year, but generally you turned the page. You did see Bitcoin prices. You said, what's in your control, what's not. Bitcoin prices have not gone as high as I think many people would have thought in the early days of the Trump administration. Would you look to consolidation at this juncture in order to gain scale, whether it's with Riot or anybody else?
So we announced the acquisition of Stronghold Digital Mining, I think back in August of last year. And so we're scheduled to close on that later this month. We're super excited about that. We think that's going to open up a lot of ideas for, new possibilities for us to move forward. As CEO of the company, we're always looking to create shareholder value. And if we can do that through strategic acquisitions or a merger of some sort, we're going to pursue those. I think the best opportunity for us as a company right now is the one that we've unlocked with the Stronghold transaction. And what we've done is pretty transformational. We've gone from a company that was going to be 40% in North America with only 6% in the US and 60% in LATAM to a company who's now going to be 80% in North America by the end of the year with about 66% in the United States. So we've completely shifted our entire energy portfolio. That's opening up a whole world of opportunities for us on the HPC side and targeting hyperscalers, but it's also improving the quality and the cost of those megawatts. So, for us right now, I think the best opportunity is continuing to execute on the path that we've laid out and really building out these 2 sites that we're closing in on.
And we thank you so much. We're out of time. We appreciate your time joining us here on set. That is Ben Gagnon of Bitfarms, of course, the CEO there. And coming up last Friday, of course, President Trump gave the crypto industry a seat at the table in Washington. The White House summit invited industry leaders and his crypto task force to hash out how the government can support digital assets. We're going to break that down for you next.
And David Sachs, White House AI and crypto czar, spoke about that White House Digital Assets Summit.
The reason why we need a Bitcoin reserve is that the federal government already owns some. In the past, the strategy has been simply to sell it, in an ad hoc way, almost willy-nilly. And that cost American taxpayers something like $17 billion in lost value. So we want to have a long-term strategy to maximize the value of these holdings.
Well, last week at Bloomberg Invest, I spoke with Mina Flynn. She's co-head of private wealth management at Goldman Sachs. She gave a pretty skeptical perspective when it comes to crypto. Check it out.
You don't see it as a store of value. It's very hard to actually value.
Oh, please
cryptos.
repeat that for the crypto folks in the back.
Yeah, so
You don't see it as a store of value, is what you said.
we don't see it as store of value, and it's
Okay.
highly volatile asset. And it's hard under what valuation metrics do you actually value it. So no, we don't have it as a part of our core asset allocation.
Now, someone with a more positive take on crypto is President Trump, who held that digital asset summit that we've been talking about. Here to break it down for us, Olga Kharif, senior crypto reporter with Bloomberg News. What was the takeaway? Because we've been talking about the asset prices. Clearly, they have not gone anywhere since the summit. So what is the industry hanging on to the most?
So I think the big news happened the day before the summit when Trump announced that he is creating the strategic Bitcoin reserve and a national stockpile of other digital coins. That was sort of the big news that's been anticipated for months. And then sort of no hard news came out of the summit, but there were about 30 sort of industry and government leaders at the summit. And Trump, of course, President Trump was there. And sort of, I think this meeting just reassured the industry that it has the administration's support. And during the televised part of the meeting, there was talk about supporting stablecoin legislation and a number of other sort of industry important initiatives.
So, Olga, just 30 seconds left. What is the next catalyst here? What's the next thing to watch for from Washington? Is it stablecoin legislation?
I think so. The Genius bill introduced by Senator Hajric is in markup, and there is a hearing on that today. So I think that's the one, definitely the one to watch.
All right, a big thank you to Bloomberg's Olga Kharif. Be sure to tune in just a few minutes because we're going to hear from Khosla Ventures founder Vinod Khosla joining us on a special edition of Bloomberg Technology in just a few minutes. That is going to do it, though, for Bloomberg Crypto. Good job at Invest, Chanel. I'm glad we got to play that clip of Mina Flynn.
Thank you. Next time, maybe we'll have more crypto titans at the table. But of course, many of them are even still in Washington today, actually.
That's a good point.
So maybe they'll come back up to New York City as those banks maybe start opening up to crypto. Let's see how far the president can get. Join us same time, same place next week. That does it for Bloomberg Crypto. And of course, we'll keep an eye on those asset prices for you in this volatile market. This is Bloomberg.